Hey viewers, you're watching the Savera and I'm Vidhi Joshi. The Indian rupee witnessed its weakest annual performance since 2022 in 2025, depreciating by nearly 5% against the US dollar, even as the greenback weakened globally and most emerging market currencies posted gains. The underperformance stood out in a year when external conditions were relatively supportive, highlighting the role of domestic capital flow pressures rather than macroeconomic instability. According to a recent report by SBI Funds Management, the rupee came under sustained pressure due to muted foreign portfolio investor inflows, weak export momentum, and heightened hedging demand from importers. Foreign investors pulled out nearly $18 billion from Indian equities during the year, citing earning downgrades. India's limited exposure to global artificial intelligence led growth themes and more attractive investment opportunities in other emerging markets. Persistent trade-related uncertainty and increased dollar demand from importers further weighed on the currency. Despite all these challenges, SBI Funds Management expects a notable shift in the rupee trajectory in 2026. The report projects that the currency will depreciate by only around 2% in the next financial year, with the exchange rate expected to stabilize near rupees 92 against the US dollar. This marks a significant slowdown compared to 2025, which saw the rupee endure its sharpest annual decline since 2022. The improved outlook is underpinned by stable domestic fundamentals. India's current account deficit is projected to remain below 1% of GDP, supported by strong services, exports, and relatively subdued crude oil prices. Inflation is also expected to stay anchored close to the Reserve Bank of India's 4% target, reducing the risk of macro-driven currency shocks and reinforcing confidence in the economy's stability. Global factors are also expected to turn more favorable for the rupee. The US dollar is likely to remain on a softening bias on the US Federal Reserve approaches the end of its easing cycle, a development that has historically supported emerging market currencies. In addition, the rupee's real effective exchange rate has declined to about 5% below its estimated fair value, improving export competitiveness and limiting downside risk. Capital flows could also provide support in the coming year, and the potential inclusion of Indian government bonds in major global bond indices, stabilization in corporate earnings, and the likelihood of renewed foreign portfolio equity inflows may help ease pressure on the currency. Analysts note that the rupee's weakness in 2025 was driven more by capital outflows and hedging activity than by any deterioration in underlying economic fundamentals. Overall, SBI Funds Management expects a more supportive environment for the Indian rupee in 2026. After a challenging year marked by foreign fund outflows, trade uncertainty, and elevated hedging demand, the pace of depreciation is expected to slow significantly, setting the stage for greater currency stability in the period ahead. That's all for now. Stay tuned to the Savera for more updates. Do like, comment, and subscribe to the channel.